Hello, my name is Yale Simpson. I'm the executive chairman of Exeter and Extorre. In your programs, it probably said Exeter's giving this presentation. This Extorre is a spin out of Exeter. Many people have been asking about Extorre. So rather than doing Exeter, I'm doing Extorre. Back in March, we spun out this company. Today it has approximately $500 million market capitalization. We are moving into development of a really high-grade mine in Argentina. This is the usual cautionary statements. This is our capital structure, $42 million in cash. That money is being burnt at $2 million a month on drilling, primarily drilling. We're operating here in Argentina in a province called Santa Cruz. The projects there came out of Anglo Gold Ashanti back in 2003. We picked up 25 projects at that time. We're still working our way through them. Down west of Cerro Moro, you can see at the bottom right there, west, there's a mining district there, Anglo Gold, Pan American, Minera Andes. There's a whole number of companies mining there. We're right near the coast, near a town called Puerto Deseado. So most of the deposits around us in size are between 2 and 6 million ounces in size. We are 1 million ounces at this stage. We have finished a preliminary economic assessment for the project. We will move into construction mode towards the last half of this year. We are modeling 133,500 ounces a year. Cash costs of $201 an ounce. So this would rate as one of the lowest cost producers really in the business. 4 drills are still operating. In fact, there's another drill elsewhere operating as well. So what we're doing here is, and I'll show you another slide on the economics, the project is in the permitting stage now. We anticipate government approval this quarter. But really, the driver of value while we go into the construction phase will be exploration. Like I said, the deposits around us are a lot bigger. What makes this one unique, and this is the table of resources, if you add this number here and the bottom number, it comes to 1 million ounces. But for the first 5 years, the dominant grade is 32 grams per ton gold equivalent. A gram of gold is worth about $40. So we're dealing with open pit mining of ore that's going about $1,200 in gross value per ton and modeling 95% recovery. This will make it very unique in the industry just because of its grade. What's really important here is the 1 million ounces that we have is based on 4 veins that we have enough drilling on. This is a map and you can see the scale. This is about a fraction of our property. But if you look at number 6 up there where you see the yellow rectangle, we are drilling 10 kilometers away from the original discovery, which is way down at the bottom towards number 1. So this is a large vein field. Drill the holes and you will find the gold. That's certainly been the history of both Anglo Gold and now Gold Corp, who bought our neighbor to the north, being Andean Resources. So what we're doing, what we're showing here is with the 4 drills, where are they? They're not on the main deposit anymore. They are drilling off additional ounces. So this, like I said, as you wait for the construction, as you wait for production, the market will value us as a growth story, not simply a production story. Here the mine development we're looking at here. You can see 436,000 ounces of gold over the mine life, and really we're only modeling what we've drilled off so far, or at least until last March. 21 million ounces of silver. What's interesting in this silver space is that if you use today's silver price, this won't be a gold mine, it'll be a silver mine, with gold being the byproduct, not silver. 750 tons a day, $201 an ounce, capital cost only $131 million. That is very low for that number of ounces per year. What do our financials look like? You can see we can pay back that capital. The payback of the $131 million is less than 2 years. In fact, this has been modeled at $950 gold, $16 silver. If you model the payback today, on today's prices, this would repay its investment in months because of the bonanza grades that will be going through the mine. So it is very unique because of these very high grades. Now, what is important, back to what are the value drivers, we have a fifth drill now operating. And in red, this is the area of Patagonia where companies are finding gold. The big red dots are where the other mines are. The one on the top left there, Cerro Negro, is the one that Goldcorp bought in September for $3.6 billion. And that's not in production. That is an exploration property still. So all on the right-hand side, you can see where we have the drills operating. Cerro Moro being in this area here. But the drills we've been drilling on the one to the left, Alberti, Falcon, we're moving to Pantudo. So the drivers of value will not simply be the 4 rigs at Cerro Moro, but waiting for us to make another discovery. So here's the drivers of value. We announce about 6 times a year what's coming out of the drilling. We're listing this company on the New York Amex Exchange. That has been very good for Exeter. Opens up a large retail base. That should happen this quarter. We're expecting the approval from the government to go ahead to build a mine. That should come this quarter. A new resource will be out mid-year. That will be a value driver. The pre-feasibility study, mid-year. Decision to mine, Q3 this year. So what is really important here are these drivers. The drivers being at any point in time, this company can come up with a press release that will fundamentally change it. Today, mostly coming from the drill bit. This is where you can get coverage. We're widely supported by TD Securities and Canaccord. You can see Salmon Partners. We are in booth number 520. Come around and see us. Thank you very much.